Hello traders and welcome to another video review. Today is Friday, October 28, 2022. Let's find out what is going on the Forex calendar today after the ECB interest rate decision took place. As you can see, we got another interest rate decision from the Bank of Japan overnight. We got the Bank of Japan monetary policy statement and outlook report. All of this data are, of course, very important. The press conference took place at 8 o'clock from Bank of Japan. However, in the meantime, we got the German GDP data release at 10 a.m. during the London session. We got the interest rate decision in Russia as well, scheduled for release 12:30 p.m. We got the GDP data from Canada scheduled for release at 2:30, and of course pending home sales from the US scheduled for release at 4 o'clock. Pending home sales are a very important event because just recently the level of a new home ready to sell on the US house market is drastically going down, which is why this is now very important indicator. So pending home sales for the month of the September, previous reading -2, we might deteriorate even more to -5%. So very mixed bag of data, as long as you take into the consideration only the very important ones, and it looks like we should take a look here at the Japanese yen, of course, and to see what is going on there. Maybe we'll take a look at the euro dollar to see how it is behaving after the ECB interest rate decision to the anticipated level of 2%. So let's start with the US dollar and Japanese yen. US dollar Japanese yen daily time frame chart. Our 5-wave scenario to the upside had been completed at the level of 151.96. Big pin bar, central bank of intervention. This is Bank of Japan intervention, and as you can see right now, we just retested the level of 145. Let me just zoom in to make everything is clear. Make sure everything is clear. We have the 145 test. The low was 145.12, but we won't be too picky about it. Temporary, we can place our wave A bottom at the end of this pin bar into the 30-day moving average. So today we have an inside bat so far. Not that much is going on yet. However, what we should expect now is, of course, the extension to the upside in the form of the wave B. Let me just copy one line to get the 151.96 level as the, well, it's a local top, of course. It's the top of the uptrend movement. However, for now it will stay like this. Swing high, technical resistance 151.96. We are already way below this level, of course. So far we retraced 5%, almost 5%, I guess. 4.58. 4.58 since the possible top at 151.96. Let me just find out what are the other corrections here. Let's say this one and this one is, that's the 377, let's say, and the wave 2 is roughly about, I guess, 2%. Yeah, 2.77 as well, 2.80. So during this 5-wave extension to the upside, this is the biggest correction, which means that's the overbalance of price and time, and of course this correction is in the same time the beginning of the completely new cycle. As we said, this is most probably the wave the wave A of the corrective cycle. What form of this correction will be? It looks like it will be some sort of the flat correction, maybe simple flat, maybe running flat, something like this. It doesn't look like a zigzag yet. So please pay attention to the wave B to the upside. It can be any correction, and then of course we are waiting for the wave C. Initial target 140.35. As you can see, momentum already hit the level of 50, which means this level here, 145, is the neutral level, and we will see how this market will develop in the future. Let's take a look at the euro to the Japanese yen. Daily time frame chart of the euro to the Japanese yen. Let's take a look what is going on here. As you can see, after the interest rate decision of the central bank, European Central Bank, we have a big decline here, at least for 1 day, right? So we have the decline into the bearish divergence. However, the market doesn't actually want to speed up, accelerate this decline a little bit lower. So for now, this kind of a let's say anticipated event is not really something that triggers more aggressive sell-off on the euro to the Japanese yen, because the Japanese yen is still climbing higher and higher and higher. However, we can easily see, if we just take a closer look here, that from this low we have, of course, like a 5-wave advance, right? So we got this. Okay, it looks like we have the 5-wave advance here, and it's quite possible that we just started again the corrective cycle. So it looks very similar to the euro to the to the US dollar to the Japanese yen. And it looks like we should prepare ourselves for the test of 144.19. So the outlook remains stable. Let's take a look at the British pound to the Japanese yen to see all three of them. And what do we have here? Daily time frame chart. What's happened? This was a big pin bar to the upside, and we are back on the top, making new higher high. So this technical resistance and supply zone located between 168 and 168.80 had been violated. The new swing high is located at 170.57. So let me just put another line here, 170.57. So let's make it clear that this is 57. There you go. And of course, as you can see, the momentum is decreasing significantly. So we have another higher high made here, right? Or even we can, there you go, or even we can extend it to this kind of analysis, right, between this high and this high. And as you can see, on the other hand, we got the declining momentum. So this is a clear bearish divergence, and we should expect some sort of the correction coming to the market of British pound to the Japanese yen. Moreover, as I said before, this structure here looks like a 5-wave advance with the extended wave 1. So we have wave 1, wave 2, wave 3, wave 4, and the shortest wave 5. So now bearish engulfing, and we should start the correction lower. We got the levels here. A part of this one, they need a little bit of the adjustment. There you go. This is the technical support. Let me just change the color. There you go. It's a green. It's a support. A very interesting zone between 163.93, 165.03. Very interesting zone. So we should expect a bounce from this zone. And in the same time, if we expect a bounce, it means that this is the first target zone for the British pound to Japanese yen, for the, of course, the supply side of this market. So what is going on gold market? Let's take a look. Okay, gold is not doing much. We covered it before the ECB interest rate decision. I thought maybe there would be some kind of a breakout, or nothing like this happened. We have the inside bar here of this green. Now let me just make it a little bit bigger. Now we have the inside bar here, right into the 30-day moving average. Right, this is the inside bar, and we are going lower. So if we break below the 1654, we have the inside bar breakout, and we should expect another wave to the downside on gold. And at the end, let's just take a look at the euro dollar. What is going on here? Beautiful textbook example of how to trade euro dollar using market geometry, Fibonacci levels, and the candlesticks. Big bearish engulfing pattern into 100% of the wave A extended from the bottom of the wave B. So this wave C is equal of the wave A, bearish engulfing pattern, and the market is expected to move lower. Even if we switch to the 4-hour chart, you can clearly see, there you go, that there won't be extension to the upside. At least it's very unlikely for the extension to the upside. We have a big movement to the downside, including the ECB interest rate decision. It was all already discounted by the market participants, and this is of course the correction out of the ABC corrective cycle, of course. So what we should expect, test of 9,945. Right now we are trading around the parity level. Next support 9,945, 9,901. So there's a plenty of technical support. However, it can be easily violated. Market is almost touching the level of 50, which is the neutral level. So any breakout below 9,945 would equal to the breakout in the momentum into the negative territory that might accelerate the further movement to the downside. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next week. So take care and bye bye.